Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at a weak range open here on crude oil. Now, crude oil on Friday, we opened up after that huge Friday. We had all kinds of news and Janet Yellen on the microphone, and that caused all kinds of volatility. And that volatility really didn't end up going anywhere, right? We opened here and we closed here. So even though all of this happened, we still only really on the daily chart formed a pretty much a huge doji, right? Bunch of wick at the top, bunch of wick at the bottom. And that's telling us that we're more likely going to be in a range. We open up today with a big old gap down. And what do we know about ranges? Well, this was the prior low of day. That would have been the wick low on the daily chart where we opened up outside of it. Breakout attempts are very likely to fail. We're looking at, 80% of breakouts are going to fail. Why would this one be any different? So we open up way, way down, and the very first bar of the day is hugely bullish. But a couple red flags. They couldn't get back above the prior low of day and actually formed a triple top on that area. Along with that, there's no continuation. The buyers were trying to get the continuation right here, and they couldn't even go above that candle before the sellers fired right back down. Now, at this point in time, we're anticipating this becoming a range, right? We have a range sentiment. Friday was essentially just a huge range. And we open up today, gap down, trying to get back into that earlier range, and now showing signs of weakness, which then will cause another range, right? It's range upon range upon range. So we push down to the lows, and the buyers come right back in. The buyers off of those lows tell us we're definitely in a range. We need to be looking to buy here, buy low, sell high, stay out of the middle, and you'll be okay. Beautiful buy off of the lows to ride the market back to the highs. It took a while to get there, but once it popped up to the highs, then you're looking to sell the highs, right? Turn right back around, sell it back down, and drive the market back to the opposite side. We get back to the opposite side, guess what we're doing? We're not looking for a breakout. We're looking to buy the lows, and we're looking to sell the highs. So we're looking to buy down here, and we're looking for the market to cycle up back towards those highs. We have yet to get there, but likely a lot of scalpers have already taken their profits on that move up, and that's where we start going into a range. Notice the time as well. We're also starting to go into lunchtime. Everybody starts kind of calming down a little bit as we go into lunchtime. So just a beautiful example of a range start to the morning using the context, right? When you zoom out and you look at an overall day, yeah, this looks like a really impressive day, but kind of add it up a little bit, right? We open here, we close here, right? That's not exactly the most convincing body on a candle, considering that if you were to draw the wicks inclusive on this, the wick would be all the way up here, and the wick would go all the way down here. And what is this? That is a big old doji. And what do we know about dojis? It's a range. We need to treat it like a range, buy low, and sell high. So beautiful combination of market psychology along with technical analysis to give us all kinds of beautiful setups today, albeit a little bit slow, plenty of opportunity to work with. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, and we'll see you next time.